Hello guys and welcome back to another post-market analysis of Bank Nifty. So what we have here is Bank Nifty is today's price action that is on a 5-minute time frame, and in this video we are going to see is there any takeaways from today's price action, things that we can learn from today's price action of Bank Nifty and Nifty, and after that we can see how both these Bank Nifty and Nifty are likely going to perform by looking at our daily chart here. Okay, so let's start this video with a 5-minute time frame from the Bank Nifty. So here we have the entire price action of Bank Nifty. Okay, so that's the entire price action of the Bank Nifty. If you just scale this up right, you can see that it's a pretty good trending day towards the downside. Okay, so it has started from there. So right from the opening, never ever today a Bank Nifty has again come to that level, to test, at least to test that level. So it has been so from starting to the close, it's extremely towards the downside. Of course there are some a couple of pullbacks and corrections like there and here and there. Okay, so there are a lot of pullbacks, but let's see one by one in detail. Okay, so in order to do that, let's just remove this and let's start from the beginning. So here, once after you see Bank Nifty opening at 47,853, that's the level where it has opened today. As you can see here, it's the March 11th time frame, and this is your first candle on your 5-minute time frame of Bank Nifty. So after seeing such a momentum towards the downside from one single candle, okay, so you can say that there is a sharp rejection, sir. There is a very sharp selling pressure from coming from that level. So what you should do is, if you look at the chart carefully, okay, so you have one such point here. So from this point you have seen a very sharp momentum on last working day, that's last Thursday, since Friday was holiday. So now it gives us a chance to draw a trend line based on these 2 points. Okay, so based on these 2 points, I'm just extending it that a bit. So now when you have this line, now if you notice little carefully here, okay, now if you notice little carefully, we don't, okay, so that's one. We don't just have one two, but also if you notice here it is also touching this. So this is now a valid trend line. So now all you have to do is, if the market is really the bearish towards the downside, then all you have to do is wait for the price action again to come back to this level, this line, and see a selling pressure building up there. So from there you can go towards the downside, since we have a valid trend line that is established. So now what you should do in such scenario is, let me remove this. Yeah, so what you should do is, you should simply rely on this trend line and wait for the price action to come to this level. Okay, so this trend line. So now when did that happen? Okay, so here, see, there was some confusion here. Okay, some might have thought that, see, since it's a 1030 and 1035 candles both put together, it's a bearish engulfing pattern. So let me just zoom in that a bit so that you can see better. Yeah, so now if you notice these two candles here, okay, so that is 1030 and 1035 candle. If you notice these two candles, you can see that, okay, this red candle is completely engulfing your previous candle, and moreover your first candle is very small. So some might think that, there is a bearish momentum there, but yes, there was a bearish momentum here. So after this momentum, now at this stage, at that stage, what you can do is, you can again wait for the prices to retrace back to this level or anywhere close there. But you cannot take decision right there, because you are not touching your trend line that is established previously. So it's better to wait there. And where did our first confirmation came from? So in this, our first confirmation has come from this candle, that is 1105 candle. So here 1105 candle has touched this and it has given us a bearish sign. And also, if you notice this candle, 11 o'clock candle, This itself, this candle itself is called, okay, I'm just putting that much, yeah, this 11 o'clock candle. So that 11 o'clock candle itself is known as hanging man candle. Okay, so this is a negative sign if it sees a confirmation candle after that. You see, at 11:05 we have the confirmation candle by touching this candle. So looks like this is a valid signal, okay, to take a trade towards the downside. And let's mark that. Okay, let's assume that you are trading from that candle's close. And where should be your target now? Since this is a valid trend line that is established already, what you can do is, there are so many ways how people take see entries. Many of you might be taking correct entries, but exits do matter a lot if you want to become a successful trader. See here, okay, after your hanging man candle confirmation that has come from 11:05, if you are taking a trade, your very first immediate target should have been, anywhere at this wick level. Okay, anywhere at this wick level. See here, you have a couple of reasons. One is your hanging man candle, of course, which is valid with a confirmation candle, and the next thing is your location, and your next thing is your risk versus reward ratio. So your risk versus reward ratio is greater than 1 in this case. Let's measure it. So if you are taking a trade, there, where should your stop loss? Your stop loss be right above this candle high. And where is your first target? Your first target is there. So here, if you see, your risk versus reward ratio is definitely showing 2.02. So all these points are in our favor. So one can easily take a trade there. So we have too many blue lines there. Let's now change it to a dashed line so that we know where we have taken entry. So this could have been the first target. Okay, so those who have traded only this much is also, we cannot say that it's a bad trade. Okay, so this momentum, if you are capturing, it's definitely not a bad trade. But what's bad is seeing the kind of momentum that it gave after that. Okay, so seeing the kind of momentum that it gave after that, so uh, one might have felt very guilty about their exit. So there are so many ways to exit. So this is your first swing um, that where you can keep your first target. But ideally, when you have such a trend line like this, and if you are uh, just in the first half of your trading, okay, so it's just around 11 o'clock. So there's a lot of time to go. So now if you can risk, you are already at your one time target, right? So at least if you're trailing your stop loss, if you are keeping your stop loss at your risk, at your same level where you have taken your entry, then you can kind of risk your trade, because you know that this trend line is well established. Now all you have to do is wait, carry on with that trend until this line breaks. That's another way to stay in your position. So if you are doing that, so in this case, where have you seen the breakout? Here at 150 you have seen a breakout. So your initial target, so from there to here, is just 38 points. But those who have planned their if you're planning your position correctly, okay, without falling for your emotions, then it could have been 255 points, as you can see here. But it's too late to take an entry here, okay, at 130, because you are already not only just sitting at your second half, but market has already given you a drastical momentum starting from there till here. You want to enter there, market already might have been, see, always it's very best to see if you have a trend line that is drawn based on 2 points, and third time when the market is coming to the same trend line, and that's your ideal position after you see a red candle. Okay, that's the ideal position to take an entry. Okay, so after that, okay, see here, market has come here, it has uh, okay, it is the third point, and see, it's almost there, and see, it's almost there. okay, and see it's almost there. Okay, you see here you have noticed that swing lie sorry, so your swing low did not break this time, okay, at around 12:30 to 1:15. So this swing low did not break, it started to show some strength there. So here you definitely want to stay away from the market. So because of just this fact that it has been trending continuously towards the downside. So one might say that, see here you have a similar situation. Yes, here you have a similar situation, but it market was in the first half, okay, but here you are almost at 130, okay, and it's a kind of you started to see some very strong candles. See these three, let me show you. Yeah, these three candles, these three white candles put together, it's called white soldiers, okay, it's called three white soldiers in deterministic candles pattern, okay, which was not the case anywhere here. See, you have only two candles there, you have only two candles there. So if you want to know what white three soldiers, just comment, let us know in the comment section so we can do a detailed video. So for now, just for your reference, we can say that it is a reversal sign. It is a reversal sign, okay, according to our candlesticks patterns. So after this, we have again started to see another reversal sign. See here, see here. Here you have a hammer. Here you have a hammer and also a harami pattern. Because this green body is within your previous candle's real body. Okay, so this is also a reversal pattern. So it's wise to stay away from such trades, but you cannot immediately take this as a breakout, because you see this candle is barely out of it. It's not clearly. So if you have seen close somewhere there, at least you could have taken that as a first breakout candle, but it's not the case. Whereas here, if you see, whereas here, if you see, there is no confirmation candle. If you consider this as your first breakout candle, then you have not seen a confirmation candle. And also, some might have also traded this. Those who want to take high risk, okay. So what we have done here is we have drawn a trend line based on that reaction and this reaction. So third time when the market is here, some wanted to take trade there with this as the target. See, you can do that if your risk versus reward ratio is more than one. But here it's looking almost similar. So you don't want to take, you know, that kind of a risk towards the second half of the market, especially on a trending day, because you can see that the pressure, that the strength of the momentum would have diluted a bit by now. Okay, so that is how Bank Nifty is today, and that is how you should have traded. Okay, there is another method also. See, let's look at the same price action under a different spotlight. See, for that, see here you have seen, okay, here you have seen candles are taking candles are trading at a sideways direction, okay, for quite a bit some time. So after that, what you can do is, here you have seen a breakout and also a confirmation candle there, right? Here you have seen a breakout and also a confirmation candle. This is a breakout, this is a confirmation candle. So now what you should do is simply look at your chart on the left. So here, after this level, your next serious level is that, sorry, yeah, your next serious reaction was from that point. So one might have taken an entry there, okay, but you look at your risk versus reward ratio. If you want to take a trade there, your should be a stop loss. Your stop loss should be above this. Your stop loss should be above that region, and look, where is your target? That's your target. It's still showing 1.3 as a good target, but those who are very concerned about their risk versus reward ratio could have waited for the next opportunity, which is definitely here. Okay, so here you can see that this 1030 and 1035 are bearish engulfing patterns, and now if you want to take a trade there, okay, with this as your stop loss, okay, and that as your target, it's 1.6 times now. Okay, your risk versus reward ratio is slightly increased, but that's not the good way, because by the time you see this pullback happening, by the time you see that pullback happening, you have unknowingly uh, arrived at another swing reaction here. So this time, your first target should be that. So again, let's not get into so much of confusion when trend line is clearly showing you the direction that is towards the downside. You could have simply rely on this trend line today. Excuse me. So that's it about the today's price action of Bank Nifty. Now let's remove all these drawings and switch to our daily time frame to see how Bank Nifty is likely going to perform for the next coming days. So before we do that, I kindly request you to hit that subscribe button if you haven't subscribed to our channel yet. Okay, so now let's get back to the daily time frame. Yes. Okay. So, from last many days, we are discussing about this zone, right? This zone is arrived based on, see, this gap. Okay. So now, after this breakout, we have after this breakout on March 4, we have discussed that we may eventually come to this level now because we have seen a breakout there and the market was looking extremely good. But here, once after touching this on this particular day, that is on March 6, when you have seen a sharp reaction coming from there, after that next day we have seen a bearish candle. But see, now in order to think that market is still in an uptrend, we need to see a close up of this. But that didn't happen. We have seen a bearish candle, even though it's not very strong bearish pattern. But still, we since we are at the resistance area, we have asked you to be little careful while you are trading there, and we have asked you to take your trades according to your swing high and lows that got created the from that particular day. And this is our particular day. This is today, and we have already seen how we have traded. So now looking at this chart, we can clearly say that, see, we have a kind of a small support area there. Okay, this is by looking at these three candles exactly. So now after, if you see a breakout again, in order to believe that Bank Nifty is going bearish, we need to see a breakout from there, and then your next important level is going to be this. Okay. But let's wait and see what's going to happen. So if tomorrow, if you see a green candle, then again there is a chance for us to start seeing a Bank Nifty that's coming towards this level. Okay, so right now it's looking a little bearish, but it's definitely standing at the support. So if you see a gap down opening, and then if you see a pullback, if you see a gap down opening, and if you see a pullback, and if you see any negative reactions tomorrow, then you can expect Bank Nifty to fall towards the downside. But if you see a gap up opening, and then if you see support taking place on your intraday chart, then there's a chance for Bank Nifty to rise towards the upper level. But it's wise to always, stick to your intraday time frame. This is just to know about the wider picture of the market, but it's not going to help you much if you are an intraday trader. This is just to understand your major trend, right? So that is how Bank Nifty here is looking. And also, let's do one more analysis here, that is based on this trend line. Okay, so here you can see that it is a trend line drawn based on these two reactions. Now this can also act as support if Bank Nifty started falling uh, too much beyond this level. But let's see, tomorrow is going to be a crucial day for the Bank Nifty, so let's see how it's going to react for with this level, especially that is 47,000 uh, to 300 to like 200 area. Okay, so that's it about the Bank Nifty on a daily time frame. So now let's change our chart to 5 minute time frame, and then change our instrument, that is our index, to Nifty. So here we have Nifty. So here it's a different scenario, but the trend is same. You can see from the opening, uh, Nifty has never come to the same level again to test the market, and it has given us a close there. You can clearly see that it's a downtrend day for the Nifty as well. So, but here, if you notice the opportunities, here you have very less chance to draw a steep trend line. See, before this, you don't have any highs that is coming from this range. Okay, so this is your starting point today for the Nifty, right? So from there, okay, your next reaction was that. So if you draw a trend line based on that, okay, if you draw a trend line based on that, see, first of all, it's very steep down, okay. So when the Nifty at 1020 has again come to this level and has given you a bearish candle there at 1025, okay. So now from there one might have taken a trade. So from here one might have taken a trade, okay, keeping obviously anywhere in this big zone as your target area, and that is achieved. But if you see, after this momentum, you can see that this whole trend line setup is only getting disturbed, because now you have to readjust it in order to make sure that it's touching this part, okay. And now that this part is not touching, okay, and you have only two reactions at your uh, trend line. So your trend line is derived based on only these two reactions, and after that you cannot rely this, you cannot take this as a breakout. So a trend line which is drawn based on only these only any of these two reactions is not a valid trend line, it's just a tentative trend line. So forget about this breakout and all that's happening. So instead, here how should your analysis should have been? It's simple. See here, at 940 you are seeing a very strong hammer, okay, and also the same hammer, its real body is within your previous candle's real body, which is telling us that this is an inside candle formation, also known as harame candle formation. So now I'm taking that off. So this is your obvious, this big portion of your hammer is obviously going to be your uh, support area. So now you have seen a breakout and you have seen a failed breakout. We can tell that with this candle, 1005 candle, which is not a proper confirmation candle. This is a green candle here after this breakout, so it's not a confirmation candle. But again, you cannot go call because this candle is not seen getting closed above this. Okay. So now what happened is, when you notice for the second time Nifty, when it's touching this area again, you for the second time you have seen a bearish engulfing pattern there. So here now you can definitely take a thing towards the downside with this anywhere as your target, and this above this as your stop loss, if your risk versus reward ratio is permitting that trade, if it's more than one uh, so in this case it's zero point 0.9. So some might have taken, some might have not. It's ideal and it's better and it's wise not to take, even if it is 0.95. It's better to wait for the right conditions for you to pick the trade. So now if you notice, here you have one reaction and here you have another reaction, where I'm talking about this reaction. So now here you have one, here you have two. So when the Nifty is at third time, when it's there, this is showing us some negative sign, and this time your risk versus reward ratio, your risk is very tiny. Your risk is very tiny, and your target can be anywhere in this wick portion. So ideally, this as the first target. So here we definitely have a good risk versus reward ratio. Okay, if you are entering at that close, and if your stop loss is right about that candle, and if your risk, if your reward is that, see, only this much is your 2.54. It's giving you more than 2.54 times of your risk. So it could have been a good trade here. So some might be thinking that it's very small, but it's not about how small and how big the momentum is. It's about how correctly how correctly you are trading this with your strategy, uh, without surrendering yourself to the need to trade emotion. Okay, so now this becomes a valid trend line after this reaction. Now all you have to do is wait. Some might have taken their first target somewhere there, and some might have been waiting to for this breakout, and that happened here. This breakout had happened here. So this is not a valid breakout, but still you would not want to stay towards the put side. Okay, so here what has happened at 12:35, you have seen a breakout, but after that 12:40 you haven't seen a confirmation candle. So if you would have seen a proper confirmation candle here, then you can turn towards the call side, but that's not the case. So notice carefully what has happened here. It has given us a bullish engulfing pattern, okay, and one might have take this as a call. One might have taken this as a call option, and they might have been trapped because see here, your stop loss is hit here, your stop loss is hit, and that's okay. So let's assume that this profit is taken away from this trade. And if you notice here again, you have seen a hammer like candle at 135. So this time it worked, this time this candle worked, because this is taking support based on the trend line. We know that the trend line is going to act as support and resistance. So now here, uh, since the bank nifty is coming from the upper side, it is acting as a support. So now with this as their entry, one might have taken, their first target somewhere there, which has paid off again. But you see, again a bearish engulfing pattern. So from there till here, this trade also worked. And if you notice carefully, these three reactions, okay, so let's assume that, see, this is one, okay, and this is 2, okay, and this is 3. So now this pattern is called, okay, so now this pattern is called head and shoulder pattern. But it is also, in Japanese candlesticks language, this is also called as a Buddha treetop. That is a name for it, because your second peak is higher than your previous peak, as you can see here. So now what this says is, what this, if you're so much, if you want to know so much about this in detail, what you could have done is, you could have drawn a neckline here, okay, and taken your entry here at this candle, and you see the kind of momentum that you got towards the downside after that. It's a very good momentum. But also next time, okay, you see when the nifty traced back, you are at 3 o'clock. So again from there, you have seen nifty coming back towards this swing low levels. So again, that's one might be thinking that it's too much. Yes, of course it's too much, because you are taking too many trades, which is not good, and you are taking trades towards the closing in the last 1 hour is also not good. But to learn from the chart, this is what we can learn from nifty's price action today. So now let's change our time frame to daily time frame and see how nifty is performing there. Yes, so this is very clearly, very clearly telling on a daily time frame that this is a bearish sign that we are seeing here. So in order to call again nifty as in a, to say that it's in a bullish trend, you need to see a breakout from that level. But towards the downside, if you see, you have a good scope to fall. But before that, you have this swing reaction right there, okay, this swing reaction right there, which is coming from this peak. So now there is a chance for the nifty to take support. So you have to wait and see whether it is taking support here or whether it is breaking down. But remember this point, in both bank nifty and nifty, since we have seen a very big trending day towards the downside, ideally we may see, traditionally we may see a sideways action in the coming 1 or 2 days. So also be prepared for that, and don't pick too many lots. Don't trade too much with your quantity for the next couple of days. That's it, guys. Hope you have understood and learned something from today's video. So if you haven't subscribed yet, please hit the subscribe button, because this is how we learn Indian stock markets, by using daily chat in our channel. So see you in another video, that is tomorrow's post market analysis video. Until then, happy trading. See you.